I know exactly what you're probably thinking. Oh great, another video about taxes. Another confusing law. More bad news for people like me. But stay with me because this one is different. The new tax law that was just signed isn't just another political headline. It's not one of those changes that only benefits the ultra-wealthy or corporations. No, this one is designed to directly affect your paycheck, your retirement savings, your Social Security benefits, and if you're a senior, it could actually put more money back into your pocket. So today, I'm going to break down what this law really means for your family, your taxes, and your future. And I'm making you a promise. By the end of this video, you'll understand these changes better than 90% of the people debating them online. According to the Treasury Department, this overhaul has 3 big goals. Simplify the tax code, cut down on confusing forms and complex rules. Provide relief for middle and lower income families, especially seniors, parents, veterans, and disabled workers. Encourage long-term savings for retirement so people can actually keep more of what they've earned. And while I've seen politicians promise simplification before usually ending up with more complexity this time, there are some real, tangible changes that could actually benefit families who are barely scraping by. Let's break it down into plain English. Seniors, 65 plus, the biggest winners. You're now entitled to a $6,000 additional deduction. That means you'll be taxed on less income, saving most seniors anywhere between $900 and $1,500 per year. Working parents, the child tax credit is expanding, which means larger refunds for families, especially single moms and dads. Veterans and disabled individuals, new protections make sure VA benefits and disability checks aren't unfairly taxed. Retirement savers, IRAs, Roths, and 401(k) all come with new, more flexible rules. Unemployed workers' penalties are being reduced for early withdrawals, and there are better protections for unemployment benefits. And let's be clear, the people who will see higher taxes are the wealthy and those exploiting loopholes. If you're a typical retiree, working-class parent, or living paycheck to paycheck, this law is targeting relief at you. Here's the stuff that matters to your wallet. The $6,000 senior deduction. If you're 65 or older, you now get a bonus deduction of $6,000 on top of the standard deduction. For 2024, the standard deduction was $14,600 for single filers, $29,200 for married couples filing jointly. Now with the senior bonus, that jumps to $20,600 for single seniors, $41,200 for married seniors over 65. Here's a real-world example. If you're a single senior making $30,000 from Social Security and a small pension, before this law, you were taxed on about $15,400 of income. Now, that drops to just $9,400. That's a tax savings of roughly $900 to $12 per year. And for seniors living on fixed incomes, that's not pocket change, that's groceries, prescriptions, or utility bills. Roth IRA contribution limits raised. Another big change: more people can now contribute to Roth IRAs. The income limits jumped from $138,000 $153,000 for single filers, $218,000 $240,000 for married couples. Why does this matter? Because Roth IRAs are powerful tax-free growth and tax-free withdrawals in retirement. Plus, many employers are adding Roth 401(k) options now that these rules have shifted. Required minimum distributions, RMDs, delayed. If you have a traditional IRA or 401(k), you probably know about required minimum distributions, the age when the IRS forces you to start pulling money out and paying taxes. That age just moved from 72 to 75. That's 3 more years for your retirement money to grow tax-free before Uncle Sam takes a cut. For someone with $100,000 in an IRA, that extra growth could mean thousands more dollars staying in your account. Early withdrawal penalty relief. Here's something important for anyone who's faced emergencies. Normally, if you take money out of your 401(k) or IRA before age 59, you get hit with a 10% penalty on top of regular taxes. That penalty is dropping to 5% in many cases, and there are now new hardship exceptions for things like unemployment, medical bills, or family emergencies. This gives people more flexibility without being punished as harshly during tough times. Simplified tax filing. For years, politicians promised a simpler 1040 Easy form, and it usually ended up more confusing. But this time, several redundant forms are eliminated, and the new 1040 Easy really is easier. This should save people hours of frustration and, in some cases, reduce the need to pay for costly tax software or preparers. Child tax credit expansion. Families earning up to $85,000 can now claim the full $2,000 per child credit. Previously, this phased out at $75,000. For a family with 3 kids, that's $6,000 straight back in your pocket, money that can make a huge difference when you're juggling rising grocery bills, gas prices, and school costs. What about the downsides? Now, I promise to keep this real. Here are the trade-offs. Some itemized deductions are disappearing. If you've been deducting unreimbursed work expenses or smaller miscellaneous write-offs, you may lose those. High earners households over $400,000 will see tax increases. Implementation timeline matters. Some changes, like the senior deduction, start immediately. Others, like Roth expansions and IRA age changes, phase in over the next 1-3 years. Let's get practical. Here's what you need to do today to make sure you don't miss out. If you're over 65, tell your tax preparer about the new deduction. If you do your own taxes, look for the additional standard deduction for age line on your form. If you have retirement accounts, contact your 401(k) or IRA administrator. Ask when there's system updates for the new rules. Don't wait. If you're close to retirement, recalculate your timeline. 3 extra years before mandatory withdrawals could change your strategy. If you're a caregiver, look into the new caregiver credit worth up to $15 if you're helping aging parents with medical or housing costs. If you're unemployed, consider opting in to have taxes withheld from your unemployment checks to avoid surprise bills. Here's the bottom line. Tax laws are never perfect. They're never permanent. But this one right now is a step in the right direction for millions of Americans. Seniors save hundreds, even thousands. Parents get bigger credits. Savers get more time and flexibility. Veterans and disabled Americans get more protections. It's not going to solve every financial problem, but it might just give you the breathing room you need. And sometimes, that little bit of breathing room makes all the difference. But here's the catch: you only benefit if you know the rules. Too many people miss out because they don't realize these deductions, credits, and protections even exist. So if this video helped you, hit that subscribe button, tap the notification bell, and drop a comment below. Are you a senior excited about the new deduction? A parent planning on a bigger refund? Or someone wondering how to adjust their retirement plan? Let me know your situation. I read every single comment, and your questions help guide what I cover next. Remember, knowledge is power, especially when it comes to your money. The more you know, the better you can protect your future. Thanks for watching, and I'll see you in the next